We detected an unusual trade worth $130 million on Coinbase stock, ticker symbol COIN, coined. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying or bearish and selling. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, to make better, smarter financial decisions. This is how smart money always seems to be one step ahead before the rest of the market catches on. And so without further ado, let's dive into our data analysis so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, on June 10th, at 11:11 at the 29-second mark and at 2:35 at the 11-second mark, these June 20 options at the 250 strike calls and the August 15 options at the 250 strike calls were being traded. And we can see 29,470 contracts and 16,780 contracts were being traded. And we can see the prices here. Keep in mind, these are options prices. And so we either move the decimal 2 places to the right or multiply by 100 since each options contract represents 100 shares of stock. And so these August 15 options cost $2,848. And based on our analysis, the June 20 options are closing trades, and this wealthy investor was rolling to the August 15 options, rolling out in time. And so the new trade is the August 15 options at the 250 strike calls. And so we can calculate the estimated cost of this trade. We have 29,470 contracts plus 16,780 contracts, and we get a total of 46,250 contracts. And then we multiply by the price of $2,830 each, and we get a total trade cost of $130 million. But keep in mind, just because a trade is large does not necessarily mean it has a high chance of success. In fact, these smaller, more selective trades that we share on our website have a higher chance of profit and lower risk. And so if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, before we share it with the public. So if you're tired of trailing the crowd and want more time to act on these opportunities, just head over to our website where you can see in real time when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that said, we still traded this, but we use position sizing to manage our risk. As we can see here on the option chain, for these August 15 options at the 250 strike calls, we have our position here. POS stands for our position, and the green color indicates a buy position. And notice the open interest here is 47,000 open contracts now. And so this is how we know these were new opening trades, because if we look back at the historical data, we can see here on June 9th, the day before the unusual option activity occurred on June 10th, that for these August 15 options at the 250 strike calls, there was only an open interest of 1,900 contracts that were previously opened. So we know that these were new opening trades because the open interest has increased. And if we take a look also for the June 20 options at the 250 strike calls, we can see here that the open interest was at 53,000 contracts that were previously opened. But notice that if we take a look at the updated data now for these June 20 options, we can see here that the 250 strike calls have now decreased in open interest to 27,000 open contracts. And that is how we know these were closing trades. and not opening trades. And so this investor closed out of these trades and rolled to the August 15 options, as we mentioned earlier. And so based on our analysis, this investor bought these 250 strike calls to open for $28.30 each, the same price as we saw earlier and calculated on the options time and sales tape. And so when we analyze this trade, we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below the zero break-even line, as the share price goes down, this trade becomes more negative loss. And if it trades above the zero break-even line as the share price goes up, this trade becomes more positive, more profitable, because this trade is going long bullish on Coinbase stock. And we can confirm it on the Greeks. We have a positive delta trade. But keep in mind, we have a negative theta, which means that this trade loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. And because of this, the break even on this trade moves higher as time goes on. And so even though we bought the call options at the $250 strike price, the stock needs to trade above $278 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't put a lot of capital into these higher risk trades. Instead, we focus most of our capital on the lower risk, higher probability of profit trades, the kind of trades we share on our website. If you want to get access to those, we'll put a link at the top here. Let us know in the comments, do you think Coinbase stock will go up higher, or do you think it will drop down lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.